Hello friends, about to start the video. I'm not in it again, my camera didn't work, whatever, forget about it. You can hear me talking, it's fine. I'm still smiling, I'm still healthy, hope you're well, have a good day, let's jump into the charts. Hello friends, let's take a look at Ethereum. Now, I just did the Bitcoin video. I was disparaging to myself in there saying I wasn't very coherent, but I did get a lot of information across, and I hope that it's been useful for you. Let's take a look at the Bitcoin prices or the Ethereum prices just now, I should say, and see if we can see anything jumping at us on the charts. You know, we spoke about we gave a sort of score in the video yesterday. Of course, you can watch that again, and things haven't overall all changed really since there all that much. But we can, in terms of how we've had, you know, divergence here, not so much there, divergence here, not so much there, that sort of thing on the go, and there's questions to be asked about either side here in terms of this overall trend that we've had. Let's kind of zoom in, get rid of the oscillators, take a look at some of this. Oh, it's so noisy all the time here. Anyway, this is what it is. I'm just sort of thinking how the audience going to see. We've got a Fibonacci retracement drawn in here, and we've got the 236 of that Fibonacci retracement going. You know, that's the 0 point up there at the bodies at the top there, down at the 168 level. Now we've spoken about it so many times, sort of 166 and all that as being our as a little pivot point in the market, and we've seen that operating as such over the last few days. So let's continue to bear that in mind, and we've come down, we've put in lows so far at the 6,000, at 1,000, at the 166. Oh my goodness, like and subscribe, and level. And that's, so yeah, we've seen that act as support, and that could be a higher low for us, and that would be a good thing to see happen in positive, more positive overall in terms of just the price action, in terms of this compared to this Fibonacci thing here, because we'd be staying above the 236 there, which would leave it as being invalid. You know, until such times as you go below the 236, it's not valid. We're staying above the 50 simple moving average. That's good as it continues to go up the way. We kind of actually really want to see the prices operating in the 170s, so that you can so that we can see actually get a golden cross here in the daily time frame. That would be good. And of course, we've got various other moving averages coming up the way that we could rely on, so to speak, should we want to continue the upward overall trend that we've got and set in a higher low. So could be looking towards 156 should that happen. You could go down as far as 151, where we've got the 236 of this Fibonacci retracement over here happening. Of course, that $150 level as well in and of itself is a round number. You could come down there, set in wicks and whatever else, and have a low, higher low close on the daily time frame, and not get too bearish about things, you know, which is a significant enough price action move away from where we are just now, and is a tradable event if that was to happen for people. But there's things on the way down there as well that you could look at as being profit taking targets if you were shorting it, or indeed, you know, potential areas for longing it up from. The very first of which, of course, being in and around say 166, like we've been talking about anecdotally, or if you just want to have a sort of hard line to look at, for instance, then you've got the 236 Fibonacci retracement body to body from the lows to highs here in this overall upward move in there at 168.80. 60, 100, whatever, 168.60. So the current price has been 171.15. That's decent, that's good enough, but we're kind of below the 200 simple, and you know, there should be a caution thrown out there in things. So just like in case you didn't watch the Bitcoin video, I was trying to kind of put a lot of caution there, because I feel like the world is wanting to say things. Now I could be totally wrong, but this might just be my narrow viewpoint. But I feel like people are wanting to talk about how because Bitcoin was invented during the last economic crisis, that during this economic crisis it's going to suddenly become amazing and whatnot, and you know, as if it already hasn't. Crypto's already been amazing, but we see this massive drop in the oil prices and things like that as we went through the rollover of the contract, and people became kind of like, people in the world are quite, you know, fearful about economic stuff. So there's a lot of risk out there, and we could, you know, obviously in terms of Bitcoin, we could see a similar scenario if you're only watching one or the other. In terms of this 236 Fibonacci retracement and moving down, we could see, you know, things turning around here, and at which case, you know, it would be even easier to put in the lower lows on the Bitcoin prices compared to over here in the Ethereum prices potentially in terms of what we're looking at in the shape of this and whatnot. So you know that's to be aware of, and if those things happen, then we'd have to be even more cautious in the market currently. But what are our levels then? I suppose current to look out for. You know, going down below 163 is negative, and I could expect perhaps another few percent move on down to the 156 should that happen. Not a financial advisor, that's financial advice by the way. I'd like to see the price move above the 200 simple to give us another chance to come up here and having a shot at the 177 area again. I would like to see if we start doing those sorts of things though, to continue that up the way and actually continue this trend, you know. So it is important where the higher low comes in at, and that's why I'm comfortable enough with the higher low coming in at 166 or something like that, even though we've had a bit of positive price action. That's a few bucks down from where we are. Should that happen where the 50 simple moving average is and things like that overall, and we can to continue the upward trend, because moving up above 177 again and then coming back down again at that point, it's kind of going to, I don't want to have to go through another consolidation phase, although if we do one, that could happen in and around these areas. So again, 177 being a profit taking line is fairly sensible. We've got the 233 simple moving average coming in right in that area. Can change this over to 200 again, you know, and you can see it's right on 177. So depending on what sort of numbers you use and your moving averages and whatnot, we've got areas in there to look for. And that's a decent enough profit taking target. Of course, should we see prices move on beyond there, then the next areas of concern for us to be aware of is when we get up to that 190 area, really, because then we can actually look towards having another higher high on the daily, and that's great. And also there's a 50% retracement line in here. Let's keep scrolling out to the left, and you can see there's a 382 Fibonacci retracement line here. You know, that's working off of the 236, which is at 151 that we spoke about there a few minutes ago. So if we were to come up here, we'd be trying off those things. That'd be good. Could we see profit taken at those prices? Absolutely. Was this close enough? Is close enough in some senses to some of them to you know, consider that kind of hit, and in a sense, you know, maybe it is in around there, because the prices did go as high as whatever that was, 190 essentially. So you know, we've got the 50% area already kind of tested, but can we go up there and test above it and test up to the top of these yellow chopsticks that I've got on the charts here at the minute, which would take us all the way up into the 200 levels, and at which point, you know, you've got various different things operating. We did kind of discover that the 200 area could be of interest for a few reasons. One of them being the round number, one of them being kind of where the top of this channel is, and various other little things that you could be looking to. But of course, we know as well that 193 is another profit taking line on the way there, and we would expect to see a little bit of we will potentially see some profit taking happening in and around that 200 area as well. On the way up, if we were to go past that, you'd be looking towards 215, because that's where the 618 is. And if you're looking for a golden pocket retrace, then you've got 216 up to 221, 20, sort of 222 area would be, you know, going beyond that if that's what you were looking at. However, that's getting a wee bit carried away and isn't necessary just yet. If I change it off of log, maybe it's a little bit easier, a little bit better on linear, the shape of this thing, in terms of touches and whatnot, and it be an actual parallel channel, and you can see that that's working fairly well enough at the minute. So in terms of the downside and where we could be looking, just to reiterate that again as well, could be down to the sort of 160s area. We've got a couple of moving averages in there, 156, and on the 24-hour time frame in terms of the 160 area, again, you know, is there any moving averages in there? Sorry. Yeah, the 21 is in there at 163. So, right, so that kind of sums everything up for us. So let's look at the 4-hour time frame. See this as call this a 4-hour downtrend, and see if there's any divergence between it. And between these lows, which are lower than each other, there isn't divergence there in those points, so we can just kind of say fair enough. This is coming in as it's being a higher low currently. And should the prices go on down a wee bit more and the stochastics and the RSI not move down, you'd have that bullish divergence that you might be looking for, but you'd be breaking down, as we said so many times now, below this 236 Fibonacci retracement, putting in lower lows, having a downtrend, and you could have to think probably realistically look towards slightly lower targets to see the impetus come back into the market at those points. Right now, where are we? Well, we're at that 171 area. We've spoken quite a lot about this as being a pivot area for us. So when we have a sort of when we spend so much time talking about how it could go either way, it makes sense when you look back to the past and you can see how we've actually spent a lot of time in this area as a sort of jiggle and mess around, having gone either way in the past as well. So that's kind of what we're looking at again, essentially, you know. So thank you so much for tuning in. I really appreciate it. Massively appreciate it. Like, subscribe, share the video with a friend if you've got one that you think would like it, and yeah, and follow me on Twitter if you want, Rocky_Outcrop. And what else is there to do at the minute? Yeah, leave me a comment saying how you're thinking about the markets, what you think what might happen in them over the next wee while, and if, you know, things like this, Ethereum, for instance, will be exposed to the same sort of risk as traditional commodities that we've seen, and or if actually we can see some sort of safe haven aspect come into these things. I don't know. Let's have a look over the next wee while. Thanks for tuning in. Subscribe, all that jazz. Catch you next time.